Hey guys, this is an important update from SGT Report. I got a document sent to me today by a former employer, and it relates to a 401k that I have out there floating around in the world. I think this is a very telling document. I've got some real issues with it, which I shared with my employer so they could inform other people on that team. I think there's a lot of people who are unaware of what's going on behind the scenes as it relates to their quote-unquote retirement investments. And I have on the line right now Dave Kranzler. I called him in the moment for this important update. I wanted to share this with him to get his opinion on it before I went public with this document. Dave, did you get a chance to look at that Paychex document yet?
Yes, I did.
All right. Now, I don't want to sound the alarm if it shouldn't be sounded, Dave, but I think there's some very telling issues with this document, not the least of which is they want to take people out of Federated Prime Cash Obligation money markets and put people into Federated Government Obligations. I just want to cite a couple of lines here and then get your take. In one portion of this document, it says, Paychex has decided not to offer non-government money market funds. Your plan's current money market fund falls under the definition of a non-government money market fund and will be replaced. The amendment requires these funds to transact at a floating NAV for purchases and redemptions. Additionally, it gives the fund's board the discretion to impose a liquidity fee or suspend redemptions temporarily. What's your take on that language?
It depends on how cynical you want to look at this, and I think the most cynical interpretation is the correct interpretation, but essentially what money market funds are required to do is maintain a $1 NAV because they're marketed as risk-free money market funds that pay an interest rate. Well, in the low interest rate environment that we have, it's almost impossible to maintain a $1 NAV because a lot of and offer a yield. So a lot of these money funds use derivatives. PIMCO is notorious for that. They use derivatives to boost their yield. Well, as it turns out, it's they had to remove the requirement. There's a thing called breaking the buck, and that's when these money market funds go below $1 and then they have to liquidate. So what they've done here is they've removed the requirement to maintain a $1 minimum NAV, and that's why it says the amendment requires these funds to transact at a floating NAV for purchases and redemptions. So what that essentially means is that, let's say you've got your money in this fund and it goes below $1 NAV and you have to sell because you need the money for some reason and you absolutely need the money. You're going to lose money on that money on that money market fund.
Right.
Okay, and then it also lets the fund impose a liquidity fee, meaning if you want to sell when it goes below $1 NAV, they can charge you a fee, or they can gate the fund, which means suspend redemptions temporarily, which means you can't get your money out. So what this company's doing is, your former employer, what they're doing is they're saying, okay, we're not gonna offer and manage non-government money market funds anymore. We're only gonna offer federal government fund money market funds. Right? Those are guaranteed. That's guaranteed paper, and it's, they can maintain the $1 NAV requirement. What bothers me about this is that I bet you most of the people who are in this particular non-government money market fund or ones like it, they don't even realize that unless they elect otherwise, their money is going to be automatically moved into the Treasury bond fund. It also probably has Fannie and Freddie Mac paper in it.
Right.
Essentially what I think this is it's a way for the federal government to force money market funds to help fund the federal government deficit.
That was
right. Because what this is going to do is, your former company is not the only company that sent these letters out recently.
Right.
So, and to the extent that you got a few trillion sitting in money market funds, and I don't know what the exact number is, but it's probably a few trillion, and let's just say half of that stays in money market funds because people want it for various reasons, including the liquidity, which has always been an important aspect of the money market funds. basically what's going to happen here is it makes another $1 trillion available to sell bonds into, government bonds into.
Well, and that was my concern, because just to be clear, this is from the plan administrator Paychex, so it's not actually from my former employer, but it's from Paychex, which controls these 401ks. And if you take a look at the investment option being removed, that investment option was called Federated Prime Cash Obligations, and they're replacing it with Federated Government Obligations, which to me just reads debt. You said Treasuries, same thing. And if there's ever a U.S. Treasury crisis, they're just going to stop redemptions. They're going to put a moratorium on redemptions here because they've given themselves the, I guess, legalese to do it, according to this document.
Yes, that's right. This is essentially, I kind of always figured at some point in time, this was part of the move to essentially, on a de facto basis, confiscate retirement funds and use them to fund the government.
Yeah.
And this is a watered down form of that.
Yeah.
Because they knew when they removed this exemption to maintain a dollar NAV and let these funds gate their capital, they knew it was going to have a lot of people were going to move their money out of non-government funds and into government funds, government money market funds. And so Paychex, they're basically doing it automatically. They're not even giving you an option to stay in the non-government money market fund, and there's probably a lot of them that are doing that. So it's essentially a big sweep where they're sweeping it out of non-government security money market funds and into government security market funds. And like I said, it's going to make a couple $1 trillion available that wasn't otherwise available to help fund government treasury sales.
Yeah, and to be clear, they're giving participants until August 29th to reallocate existing account balances into other investment options. Otherwise, this will just happen
automatically.
Yeah, and most people don't read these documents. When you get this type of paperwork from your 401k, you're busy. A lot of times it just goes in the round file or the to be open file, and it never gets opened. I mean, people are more interested in looking at their balances. So the way that I concluded this with my former employers, I wanted to give them a heads up. And of course, I got no response. They're nice people, but either they're too busy or they don't think what I'm saying is a fact. But I wanted them to know, and I explained to them that in my opinion this is a big deal and it supports everything we've been reporting about for the past 2 years. The U.S. government is going to herd the masses into federal government debt. And this memo only affects money market balances, but it's only the beginning. Obama has suggested this approach may soon stretch beyond money market balances. The government is broke, and they will turn to the trillions in 401ks and IRAs as they become increasingly desperate to keep the Ponzi afloat. Paychex, or the government, I guess, are now giving themselves the legal authority to prevent or suspend redemptions in the event of a crash of U.S. Treasuries and a resulting dollar crisis. And we've been reporting that at SGT Report. And it's quite possible in our assessment at SGT Report that many people in this country with quote-unquote paper wealth, Dave, may one day soon find themselves trapped in a system that is imploding with no way of extricating their assets from a system designed to ensnare and loot. And I think this is just a real good real-world example of things that are going on as we speak. As we see these, the derivatives Ponzi exploding, Deutsche Bank hitting new all-time lows, there's stuff going on behind the scenes that are causing, I think, companies like this to take action, Dave.
No question about it. I don't even know if this is in reaction to the system blowing up. I think this is in reaction to a government regulation that was put in place, or in this case removed, that the government knew was going to funnel a lot of money out of sort of these prime cash obligation type funds, which are corporate bank debt and non-government sponsored mortgage securities and things like that, commercial paper, that type of thing. It's going to take money out of that asset sector and move it into government bonds, and that's what the government wants, because they're running out of. I mean, the Chinese have stopped buying government bonds for the most part. The Russians are selling theirs. a lot of other entities around the world aren't buying treasury paper the way they have historically. And so it leaves the government looking for buyers or places to place their treasury paper so they can fund their deficit.
Yeah. Yeah.
And that's exactly what this is. It's a scheme to do that.
Yeah. Well, that was exactly my instinct, and that's why I wanted to reach out to you for your opinion before I did. My first intention was to do just a special SGT report update, and then I thought, you know what? This is important enough to get an expert's opinion on it. Let's talk to Dave. And that's why it's great to have friends like you, Dave. I mean, I reached out to you on Skype, you picked up, and here we are having an in-the-moment conversation about this. Is there anything else you're working on or anything else you want to bring to our attention before we lose you?
Actually, I just want to throw in a little commentary about silver. Something's going on.
Yeah,
I mean,
big day today. Back up over, 1850, I think, at one point.
it almost hit 1890. It's pushing 19 right now.
I've been busy. I've been busy. I just posted an interview with Harley Schlanger. I've been working on that all day, so I missed it.
Oh, I'll have to listen to that tonight. And gold was down on the day. That's what makes the silver move even more interesting. So, and the open interest in COMEX gold is back getting close to record highs. The record highs we saw when gold was up around 1800 and pushing 1900. So the fact that they had to take the open interest up to that level again just to keep gold below 1400 is really significant to me.
Yeah, I heard the same thing earlier today from Andy Hoffman, and there's so much going on. You know, the WebBot report from Cliff High is saying that Bitcoin will probably sail through 1,000 here in mid-July, according to WebBot data. And he said silver and gold are going to just sprint higher, silver leading the way. And right now we're seeing silver leading the way. I mean, it's kind of historic because, according to Andy, we hadn't seen silver over 18, Dave, for 2 years. They kept silver locked under 18 for 2 years. So this is a pretty big deal.
Yeah, that's correct. I went and looked, and it was early summer or late spring of 2014 when silver went below 18. Mm-hmm. I do think that there's, we've been talking about how there's an issue between the amount of paper claims on gold and silver and the amount of underlying physical gold and silver that are available to deliver into those claims. So the June delivery month was a big delivery month, and 1.5 million ounces, over 1.5 million ounces of gold were delivered in June, and today is the last delivery day for June. So I think it's very significant that a huge slug of gold was delivered in June, and June's not one of the more significant delivery months. August and December are probably the two most significant delivery months for gold. And shortly we'll be starting the delivery. Well, the notice period for July silver started. Actually, now that I look at it, it started today. Yeah, first notice for July started today. So that meant delivery notices went out last night. And so it's going to be interesting to watch. And July is not a huge delivery period for silver, but it'll be interesting to see how much silver does get delivered. So that makes sense now that CNT moved almost 1 million ounces of silver from their eligible to their registered, which tells me that they're expecting to make some heavy deliveries for silver in July. I've suspected with a lot of other people, along with a lot of other people, and I've been talking about it with Bill Murphy since the beginning of the year, it just feels like there's an even bigger problem in silver than there is with gold in terms of enough physical to deliver into the paper claims. And I think it may be starting to show up, and that's kind of why. I mean, I looked at it, the performance a little bit earlier, and silver's been outperforming gold since early April.
Yeah.
And I also think that's significant, and I think it kind of is reflecting this idea that they may have a bigger problem with silver than with gold.
Yeah, I think you're right, and I think the COMEX is bleeding. We know about the corruption over at the LBMA. Deutsche Bank has admitted to manipulating the precious metals in the paper markets, and now the chickens are coming home to roost. And I just want to call attention to this before we let you go. Making the case for $12,000 gold and $360 an ounce silver. And Dave, as you know, and SRS Rocco notes in this important report, gold as a percentage of global financial assets is 9 times less today than it was in 1980. And get this, silver as a percentage of all global financial assets is 20 times less now than it was in 1980. Nobody's in these metals, at least in physical form. I mean, other than our listeners and you and me. And maybe JP Morgan.
Well, and I'll tell you another thing that I wasn't keeping a close eye on it until recently. But the supply of registered silver on the COMEX has been completely decimated since mid-April. And actually, that's about the time that the price of silver started outperforming gold, is when the registered account on the COMEX started just collapsing, and it's down over 66% since mid-April.
Yeah. Well, you know what we should do, man? We should have invited Jeffrey Christian on this call, and he could explain to us how this action in silver is merely a reflection of a healthy economy and manufacturing demand. Because everyone knows silver's just a metal of industry. It has nothing to do with money, and it's not considered money. And silver was demonetized long ago. So banks don't care about silver. Deutsche Bank doesn't. JP Morgan. Nobody cares about silver. It's just used for manufacturing. So the rising price in silver, Dave, according to Jeff Christian, and I'm just guessing here, is just proof that the global economy is doing great. Well, we're going to keep our eye on this. And guys, when we document the collapse like this, it's fun to do it in real time. And of course, today's impetus for making the call to Dave, just out of the blue, Dave didn't even know I was going to call, was that Paychex document. I think they're going to try to rope-a-dope the American people into investments that support this global debt, or at least the U.S. debt Ponzi scheme. And I wonder how many 401k participants will even be aware of it until
most won't even be aware of it. That's what's so frightening about that.
Until it's too late. And, we try to sound the alarm. I mean, I guess that's why people tune into Investment Research Dynamics and SGT Report. We're trying to sound the alarm and inform people because God knows CNBC isn't about to do it. Certainly Fox News, CNN, they're not going to do it in any honest way. Dave, please remind people how they can reach you over at your website.
Just go to investmentresearchdynamics.com.
It's a great website, guys, and Dave offers really sound stock advice, too, if you're interested in the precious metals. You can check out his subscription-based reports. Dave, thanks so much for this in-the-moment update. I really appreciate it.
Hey, thanks for considering me an expert to call on. It's great talking to you.
You know I do, Dave. Thanks so much. And, guys, thanks for your support at sgtreport.com. Stay tuned for real news, breaking news 24/7. Have a great weekend and a great Independence Day straight ahead. God bless.
I second that.
Yeah, God bless.